Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news policymakers no longer seem to fear inflation, even as the global economy gears up post-pandemic and commodity shortages loom. In China, ANZ analysts are pointing out that as much as 40% of the total social financing that supports the expansion of their real economy was in fact borrowers needing more to make interest payments. Given that total social financing rose 13% in 2020 and is slated to rise even further in 2021, their debt-based financing has reached a tricky spot for public policymakers. They can't restrain this growth without undermining loan quality and therefore bank balance sheets and putting their banking sector at risk. In India, they may be getting on top of their pandemic spread and their economy is returning to a more normal stance. Vaccination rates are rising fast. But for India, normal isn't a helpful term. Consumer confidence there isn't high, and there remains a lot of industry slack. Inflation, perhaps a localised version of stagflation, is embedded and likely to go away, meaning their central bank has few options to lower the cost of debt in India. That makes it an expensive place to invest. Back in China, trading from iron ore futures shows buyers it's failing to drive the price lower as Beijing wants. Yes, it took a small dip a week ago, but has risen since then, although it is not quite back to the prior levels and certainly hasn't retreated significantly, and remains 85% higher than a year ago and 30% higher than the start of 2021. If the US and Japan economies rise in 2021 as anticipated, this could put the squeeze on China. It won't then be the dominant buyer of many key commodities, and that will likely raise prices further, itself an inflation fueling event. In fact, analysts are now seeing key commodities like copper with huge price upsides. And we keep an eye on the food security situation in China for a lot of obvious reasons for New Zealand's agri-food industries, but we should also note that the extended long-term drought conditions in the US, especially in the western United States, that will have global implications for food supplies and prices. The US Treasury 10-year yield is unchanged from Saturday at just on 1.73% and a rise of 9 basis points in a week to a 15-month high. And the price of gold starts today up $2 in New York at $1,745 an ounce. And oil prices are holding at just under $61.50 a barrel in the US, while the international price is now just under $64.50 a barrel. And the Kiwi dollar opens today at 71.6 US cents and marginally softer. Against the Australian dollar, we're holding at 92.6 Australian cents, and against the euro, we're also little changed at 60.2 euro cents. That means our trade-weighted index opens today at 73.8 and slightly lower compared with where it was a week ago. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.